What's up, investors? Justin here. So I've been getting a lot of questions from concerned viewers about the possibility of NIO stock getting delisted. And this is because of a bill that just went through the U.S. House of Representatives and the Senate yesterday. And it was actually approved by both the House and the Senate. So in this video, I want to thoroughly cover the bill and talk about how this bill will impact some of our favorite Chinese stocks such as NIO, Xpeng, and Li Auto. So this will be a very informative video, and I encourage you to watch all the way to the end. But first, if you are new here, please consider hitting that subscribe button. We're on track to hit 5,000 subscribers by the end of the year, and I really appreciate the support. So thank you to all of you who have subscribed. Also, if you are subscribed and you have not clicked the bell icon, make sure you do that so you don't miss out on any of the videos I upload. And with that, let's get into the video. So the bill I want to talk about is called the Holding Foreign Companies Accountable Act. And even though the bill doesn't have a catchy acronym, it does have quite a bit of bipartisan support. In fact, it has so much bipartisan support that it actually passed the U.S. House and the U.S. Senate by unanimous votes, which means it will now be sent to President Trump to be signed into law, which is exactly how it should happen according to Schoolhouse Rock. And based on Trump's China trade policies, the bill is guaranteed to get signed into law. So with that being said, let's get into what the bill actually says. The bill was first proposed by senators from Louisiana and Maryland, and their intention for the bill was that it would help reduce fraud among U.S.-listed Chinese stocks, which has been a problem with Chinese stocks in the past. And given the fact that there are over 217 Chinese companies listed on U.S. stock exchanges, this is a big deal. Now, recently there have been quite a few examples of fraud by U.S.-listed Chinese stocks. One of the most prominent ones happened earlier this year. Luckin Coffee is a Chinese company that admitted to committing fraud in January, and it turns out that they exaggerated their sales by over $300 million in just a 9-month period. This led Luckin stock to fall 80% in a short amount of time, and it was ultimately delisted from the NASDAQ stock exchange. Now, what's important to understand about Chinese stocks is that they are not held to the same high standards as U.S. stocks are. Publicly traded U.S. companies are required by law to have their financial results audited on a continual basis. And if Luckin was a U.S. company, they would have most likely been caught very quickly. Now, out of curiosity, I did do some digging because I was very curious to know how Luckin got caught. And it turns out it's a fairly interesting story. In January of this year, multiple short sellers received the same email from an anonymous source. The email was named "A New Generation of Chinese Fraud 2.0 Has Emerged," and it contained detailed information about the fraud Luckin had committed. In addition to that, the email said that any of the short sellers who wanted to could publish a story and take full credit for it. That is, of course, if they found it credible. And one of the short sellers did actually publish the report. Carson Block of Muddy Waters LLC published the 89-page report on Twitter on January 31st. And shortly afterwards, Luckin's own internal auditor was able to find the fraud. Now, the most important thing to know about U.S.-listed Chinese stocks is that Chinese law actually prevents audit papers from leaving China. So even though the SEC requires all stocks to undergo audits, U.S. regulators cannot see the audits being done on Chinese stocks. Therefore, Chinese companies can essentially lie on their financial documents without the U.S. or U.S. investors even knowing about it. And keep in mind, there's a big difference between lying to investors and cooking the books. For example, Nikola, a US-based company, was accused of fraud earlier this year. But even though they were caught lying to investors, their financial statements were still completely accurate. So any US investor could have pulled up Nikola's S-1 filing and saw exactly how much revenue and profit Nikola had made, which of course was zero. And this is important because having accurate financial information on Nikola helped investors decide whether or not Nikola was a good stock to buy. That being said, if Nikola was a Chinese company like Luckin Coffee, then they could have potentially reported any revenue number they wanted to, which is exactly what Luckin did. And since investors use financial numbers to make investment decisions, Chinese companies can really benefit from cooking the books. So based on this risk, it is no surprise that the main provision in the bill will be to require Chinese stocks to undergo an audit from a specific US-based auditing company. The company is called the Public Company Accounting Oversight Board, and it is an independent auditor approved by the SEC. And the bill makes it very clear that any Chinese stocks that fail to comply comply will be delisted. Now, the most important part of this, for those of you who currently hold Chinese stocks, is that Chinese companies have 3 years to comply with the new rule. So based on the language in the bill, a Chinese stock will only be delisted if they fail to submit to an audit for 3 consecutive years. So it's not like NIO or Xpeng will be delisted anytime soon. But the real question is not whether Chinese companies will comply, but rather if the Chinese government will let them comply. And that's because the US has already tried to do this in the past without much success. In 2013, the Public Company Accounting Oversight Board, which is the same auditing company mentioned in this current bill, signed a memorandum of understanding with Chinese authorities. And the purpose of this memorandum was to provide a framework for sharing auditing documents between the US and China. But since signing the memorandum in 2013, the Chinese government has not been cooperative. So I would expect that the Chinese government will continue to not comply and will most likely push back against this bill as well. Also, this bill takes things a step further and requires Chinese companies to list if any of their board members are Chinese communist officials. So something tells me that China is not going to readily submit to this level of US oversight, which means that a mass delisting of Chinese stocks from US stock exchanges really could happen about 3 years from now. And if this does happen, then it is likely that current investors in Chinese stocks could lose a lot or all of their money. But even though the immediate threat of delisting is not likely, we still have to consider the risks of investing in Chinese stocks. I have made it a point to try and avoid buying Chinese stocks for many years now, especially once I became educated on the risks. But I have recently bought NIO stock and Xpeng stock because I am really interested in capitalizing on the growth in the Chinese EV market. But I would sell either of these two stocks in a heartbeat if there were any credible accusations of fraud. And some people might not like this next point, but it looks like the only way to protect against fraud in Chinese stocks is to rely on credible short sellers. And I don't want you to hear me say this and think that I automatically approve of every short seller out there. But this might be the only way. Of course, there are plenty of short sellers out there like Andrew Left who make baseless claims with no real evidence. He did it with Shopify stock back in 2017, and he also did it recently with NIO stock. But that being said, there are some short sellers that actually do good research, and they actually make credible claims. Hindenburg Research is one that I have a lot of respect for, and I don't take their accusations lightly, especially considering how they covered Nikola stock. Their report on Nikola was very thorough and detailed a lot of specific accusations that were backed up by first-hand accounts. And the report was so incriminating that Nikola was actually forced to admit to some of the fraud after it came out. So I think it is wrong to simply discredit every short seller just because they make money by shorting stocks. Now, the reason that I say short sellers are the key to protecting yourself is because the US government can't really do much. Like we talked about in the first part of the video, the US does not have any authority to review audits of Chinese companies. So fraud is unlikely to be uncovered in the first place. And if there are credible accusations of fraud, Chinese companies can simply choose to cover it up or not even address it. Now, in the case of Luckin Coffee, they were actually pretty forthcoming about their fraud, and they even admitted to it in one of their forms they submitted to the SEC. And based on that form, the staff at the NASDAQ Stock Exchange voted to delist them. And keep in mind, it was a short seller who published the accusations and got the ball rolling in the first place. But instead of being forthcoming, Luckin could have simply denied the accusations and instead claimed that they did nothing wrong. If they would have done that, then they probably wouldn't have gotten delisted. Now, let's take this a step further and focus specifically on Chinese EV stocks. One of the things that spooked me the most about potential fraud in Chinese EV stocks is a recent report by Hindenburg on Chinese EV manufacturer Kandi Technologies. The report came out just 2 days ago, and it is a doozy. The report highlights a complex scheme by Kandi to sell cars to its manufacturing partner in order to take advantage of subsidies from the Chinese government, which the Chinese government actually investigated and found to be true. And there are a lot of other shocking accusations in the report that are well documented. But in the report, I think Hindenburg did something that was really helpful. They added a section labeled Conclusion. How does a company like Kandi keep getting away with it? And it explains how it is very difficult for US regulators to prove anything when it comes to Chinese stocks. And unless a company such as Kandi admits to their fraud, US regulators really can't do much. Now, in the case of Luckin Coffee, Luckin actually admitted to their fraud. But even then, it wasn't the SEC who was responsible for delisting them. So don't think that the SEC is going to automatically investigate every Chinese stock that commits fraud. And the unfortunate thing is that Candy will most likely stay listed even though they have a history of fraudulent practices. Now, even though Candy has not admitted to the fraud, it looks like this report by Hindenburg could be enough to permanently tank Candy stock, which is basically the same result as being delisted. So that is a silver lining. But overall, the situation with Candy Technologies does highlight the dangers of investing in Chinese EV stocks. Who's to say that NIO, Xpeng, or Li Auto are not artificially inflating their sales numbers? Or that they are not being dishonest about their revenue numbers? At the end of the day, we really don't know. Now, I am not accusing NIO, Xpeng, or Li Auto of doing such things, but if a credible short seller were to come out with specific accusations, I would most likely be forced to sell. However, at the moment, there are no credible accusations, and I have no plans to sell NIO stock anytime soon. But everything we've talked about in this video is the main reason why I avoid buying Chinese stocks if at all possible. But hey, sometimes the gains are too tempting to pass up. And I also think that it is okay to buy Chinese stocks, so don't take this as me telling you to sell all of your Chinese stocks immediately. But as investors, it is important to be aware of the risks of any investments we make. So if you guys enjoyed the video, help me out and hit that subscribe button. Also, head over to my channel where I have a lot of other videos that you might be interested in. And with that, thanks for watching, and I'll see you in the next one.